Welcome to the deep dive. Today, we're jumping into something really interesting in Vietnam's economy. It looks, on the surface like their public finances are rock solid.
Yeah, incredibly stable, right? You see the numbers and think, wow, they've got it figured out.
Exactly. But beneath that, there might be this really significant, very focused risk in the private sector. And, it could potentially cause some serious problems.
It's a classic paradox almost.
So let's unpack the good news first. Vietnam's public debt-to-GDP ratio is sitting at 32.9% in 2024.
Which is, really low, way below their neighbors, way below their own legal limits, too.
Right. And they've made this smart shift towards funding themselves domestically. About 71% of government debt in 2023 was domestic.
And big institutions like the World Bank, they've acknowledged this. They see it as good fiscal management.
But that apparent strength, maybe it masks something or allows something else to grow unchecked.
That's the theory we're exploring. It might create a blind spot, and into that space steps Vingroup Joint Stock Company.
Ah, Vingroup, Vietnam's largest private conglomerate.
Absolutely massive. Some people are now calling it, de facto, too big to fail. Its footprint is huge.
How huge are we talking?
Well, estimates suggest it contributes something like 1.6% to the entire country's GDP.
Wow. One company.
One company. And it's the biggest private taxpayer, too. Think about this. Over $2.2 billion into government funds in 2024.
Okay, so something happened to Vingroup. The government would almost have to step in.
That's the implication. The consequences of letting it fail could just be too catastrophic. It's deeply, deeply woven into the economy.
So it's vital, like a main artery, as you said.
Yeah.
But you mentioned risk. What's undermining this giant?
It really comes down to this huge bet they're making, a very high-stakes, debt-fueled pivot into electric vehicles, EVs, through their subsidiary, VinFast.
Right, VinFast. Ambitious, definitely.
Yeah.
But how's that actually performing?
Well, financially, it's been challenging, to put it mildly. It's acting as a massive drain on the parent company.
A drain is maybe putting it lightly. I saw VinFast lost nearly $3.2 billion net loss in 2024.
That's right. And get this. A deeply negative gross margin of minus 57.4%. They're losing a lot on every car.
Okay, those numbers are genuinely staggering for just one part of the business. So how does that subsidiary loss translate into, a systemic threat?
It's the debt, the sheer scale of it. This EV venture has fueled this colossal accumulation of debt for Vingroup as a whole.
Okay.
So by the second quarter of 2025, their consolidated liabilities, what they owe, hit around $31 billion.
$31 billion. And how does that compare to their assets?
That's 86% of their total assets. 86%.
That's high.
Very high. And here's the real kicker. Over 63% of that, roughly $19.5 billion, is short-term debt.
Short-term medium.
Due within 1 year. They need to roll over or refinance almost $20 billion in the next 12 months.
Wow, that's immense pressure, especially if money is getting more expensive to borrow.
Exactly. We saw them issue a bond in May 2025 with a 12.5% coupon rate. Borrowing costs are clearly rising for them.
So the core question we're really digging into here is,
Right.
How fragile is this situation? Could this very specific corporate risk actually undermine all that careful public finance work we talked about?
And potentially trigger a wider crisis. Yeah, that's the concern.
And why should you, listening, care? Because a shockwave from something like this in Vietnam, it wouldn't necessarily stop at their borders. It could affect global markets, supply chains, things we all rely on. Okay, so recapping. We have this paradox. Vietnam, really prudent public debt management, low ratio domestic focus. But alongside that, this giant Vingroup carrying a huge amount of debt, especially short-term debt. What happens if they can't manage it, if Vingroup actually fails?
Well, we'd likely see contagion spread through three main channels. First, the financial system gets hit.
Hard.
Meaning bad loans for banks. Massive non-performing loans, yes. Probably on a scale Vietnam hasn't seen. You could see the corporate bond market just seize up, maybe collapse, and then a severe credit crunch affecting everyone, not just Vingroup.
Okay, that's the financial side. What about the real economy? Jobs, production?
That's the second channel, a huge hit there too. You lose Vingroup's 1.6% direct GDP contribution immediately.
Which is already significant.
Right. Then you have tens of thousands of direct job losses at Vingroup and its subsidiaries, but maybe hundreds of thousands more indirectly through their vast supply chains. Think about all the smaller businesses that depend on them. It could trigger a cascade.
And the third channel, That brings us back to those stable public finances, doesn't it?
It absolutely does. That stability could evaporate pretty quickly. First, the government instantly loses that $2.2 billion in tax revenue from the Vingroup.
Okay, a direct budget hit.
And then there's the very high probability of a government bailout, given the too-big-to-fail status we discussed.
How could that cost?
Estimates are rough, obviously, but they range from maybe $15 billion to $25 billion US dollars.
Just the bailout.
Just the bailout. And that alone could push Vietnam's public debt to GDP ratio up by 3 to 5 percentage points. Almost overnight.
Which would likely trigger
a sovereign credit downgrade, making it more expensive for the government to borrow in the future. So the public prudence gets undone by the private risk.
Has anything like this happened before? Is there a historical parallel?
There is, unfortunately. It sounds chillingly similar in some ways to South Korea's Daewoo Group collapse back in 1999.
Ah, Daewoo. I remember that.
Right. That crisis was so severe it required public money injections equal to 30% of South Korea's GDP just to keep the banking sector afloat.
30%. That really puts the potential scale of this Vingroup situation into perspective. It's terrifying.
It shows how concentrated private risk can absolutely overwhelm public finances if things go wrong.
It really does. Which leaves us, and you, with a final thought to chew on. How do we, globally, handle this too-big-to-fail problem? Especially when it's tied up with national ambition and growth. And maybe, more importantly, what other hidden risks might be lurking in economies that look stable on the surface but rely heavily on just a few corporate giants? How do we even start to prepare for something like that?
That's the multi-billion-dollar question, isn't it?
Indeed. Thanks for joining us for this deep dive.